Hello there. So in this video we are going to know the basics of accounting. So first of all we are going to know about what is accounting. So what is the definition of accounting? So as per the American Institute of Certified Public Accountants, accounting is the art of recording, classifying and summarizing in a significant manner in terms of money, transactions and events which are in part at least of a financial character, and interpreting the results thereof. So let's reread the definition. Accounting is the art of recording. So the important words here are recording, classifying and summarizing. These three words are of much importance to understand the accounting. Accounting is the art of recording, classifying and summarizing in a significant manner in terms of money, transactions. So what we have to record and classify and summarize is transactions and events which are in part at least of a financial character, and interpreting the results thereof. So ultimately we have to use the accounting information in order to interpret its results. So let's go to another definition of accounting given by American Accounting Association. Accounting is the process of identifying, measuring and communicating economic information to permit informed judgments and decisions by users of the information. So here it says accounting is the process. So accounting is a process in which we identify, measure and communicate economic information so that informed judgments and decisions can be made by users of the information or users of the accounting information. So this is the definition of accounting. Let's proceed ahead. So after understanding the definition of accounting, we have to understand that there are three types of accounting. So the first and very common type of accounting is financial accounting. In our previous videos and in our future videos, we have been studying about financial accounting. So this is the fundamental accounting, the main accounting that we refer to when we use the term accounting. So financial accounting is basically the purpose of financial accounting is to record business transactions in order to calculate accounting profit and also to ascertain financial position of the firm for a particular period of time. So this is the type of accounting in which we record transactions, do journal entries, then do ledger posting, make trial balance, and finally prepare profit and loss account and balance sheet. So this is the accounting that we will be doing in our future video as well. Another two type of accounting is cost accounting and management accounting. So cost accounting, the main purpose of cost accounting is to record actual expenditure incurred for manufacturing products in order to analyze the cost involved so that the firm can take a decision to minimize cost in future. So basically cost accounting is applicable to manufacturing businesses where cost plays a very major and crucial role, where we analyze cost, we allocate cost among various production activities, and finally the purpose behind is to minimize the cost. And the people studying cost accounting are generally called cost accountants. Third type of accounting is management accounting, and management accounting is concerned with application of accounting principles and knowledge to solve managerial problems. Now pay attention, the focus here is managerial problems in order to make proper decisions in management. So in simple words, all the principles of accounting which can be used in order to help management to make informed decisions so that managerial problems can be solved is a part of management accounting. So actually management accounting borrows from financial accounting and cost accounting. So everything that comes under financial accounting and cost accounting can be taken into management accounting that suits its needs to solve its managerial problems. Now let's move on to users of accounting information. If we go back to the second definition of accounting given by the American Accounting Association, it says accounting is the process of identifying, measuring, and communicating economic information to permit informed judgment and decisions by users of the information. So now let's see who are the users of the information. So users of accounting information can be broadly categorized into two categories. The first one being internal users and second one being external users. The thing that is when the accounting information is prepared, who is going to use that information, why that information is being prepared at all. So first, the internal users of accounting are the management of the business, because they have to manage the business. So accounting information is of very much importance to them so that they can make informed and effective decisions. As we already know that there is a branch of accounting known as management accounting, so which serves the purpose of management. So managers are one of the category of internal users which need accounting information. The other category of people who need accounting information is owners, because the owners of the business are always interested to know whether their business is making profit or not. And the third category of internal users of accounting is employees, because the welfare of employees is dependent upon the performance of their employer or the company. So in order to know how their company is doing, they are also interested in knowing the accounting information about their companies. So the second type of users of accounting information are external users. The classification is based whether the user is inside the organization or outside the organization. So external users of accounting information are investors, the people who have invested their money in the business. They could be in the form of debt or in the form of equity shares subscription. The other people interested in the accounting information is creditors, because creditors sell goods to a business on credit, so they have to see the credit worthiness of the business in order to decide whether credits can be extended to them or not. The government has to levy many taxes on the businesses, like income tax and sales tax, nowadays known as goods and service tax, GST. So, and for other purposes, for government's policy making, so the government needs this information. Then consumers need the information to know the products that they are consuming. So they want to know more about their company, how those companies are doing. Competitors also need accounting information so that they can improve their own performance on the basis of accounting information, so that they can compare how well they are doing in comparison to their competitors. So when we went through the definition of accounting, we have to understand that as per the second definition, accounting is a process, and that describes accounting very well, because accounting is actually a system which is dependent upon certain processes or steps that we have to take while doing accounting. So as we have already seen in our earlier videos, that accounting is based on transactions, and then transactions need to be generalized. So the first step in accounting is generalizing, which simply means passing journal entries for business transactions. We have already discussed it in our earlier videos, and we have a complete video in which we have shown how to pass journal entries. So after passing journal entries, the second step is posting of journal entries to ledger accounts. Under this step, we prepare ledger accounts and post these journal entries into those ledger accounts. All these steps are part of the accounting system and accounting process. The third step is balancing of ledger accounts. At the end of a certain period, we balance those accounts to get the final figure out of those accounts, and using those final figures, we prepare trial balance. A trial balance is basically a summary as on a particular date, with details of all the accounts, with their debit, with the name, their debit or credit balance, and total of both debit and credit sides. The fifth or final step is the preparation of financial statements. Financial statements include trading and profit and loss account, which ultimately gives us the figure of final profit or loss made during that period, and balance sheet. Balance sheet is a statement of assets and liabilities, which show as on a particular date what is the position of the business, what assets it has, and what liabilities it has. We have to know that balance sheet is on a particular date, but profit and loss account and trading account are for a particular period. So we will see that this is the steps involved in accounting, and we will be taking these steps we will be discussing and learning about these steps in details in our future video. So I hope now you can understand what accounting is. Accounting is the process of recording that we do by passing journal entries, classifying that we do by posting journal entries into ledger accounts and then balancing them, summarizing that we do with the preparation of trial balance and preparation of financial statements such as trading and profit and loss account and balance sheet. So this is what accounting is, and the most crucial step in the accounting, the most fundamental step, is generalizing, which we have already done. So that's all for now. We will see you in our future video. Thank you.